1.
Good day, Warriors. Dale Pinker here at TradeGATEHub.com. Proudly sponsored by TradeView Markets. Okay, so we had the euro take out this double top, sitting on what could turn out to be a false breakout. I want to point out the momentum divergences that are developing here in euro. This is not a market I want to be long. I'd be looking for shorts. I'm not saying that the move is over in the euro, could still push higher, but definitely a much weaker RSI picture than cable, and even cable, which took out every buy stop that's been sitting there for months over this double top. We finally got the stops over 440, so 440 is going to be your big level for a cable to have to hold. Want to show that the dollar index, although we made new lows and we're going for option B, and we could end up gunning for these lows, but it's not the time that I want to start jumping on the bearish dollar bandwagon. And it's for this reason: when I use my microscope on the 4-hour TF, although we've taken out this low down here, we do have a divergence. It's over 30. So this, to me, if we get a recovery, is most likely a second drive. Maybe we rally back up towards 102 and they get one more flush for a 3 drive. So this is not the time where I'm going to be stepping up and shorting the dollar. Let's watch this develop together over the course of the next several days and weeks, because one thing I'm very focused on right now is I believe yesterday's high could stand in the S&Ps. We might get a retest because the 4-hour did confirm, but I've been talking about the belly of the market showing a lot of negative action. I brought up cat tractor. Let me just get to it. So you'll know that I have so here's cat tractor. And when I say don't buy a dead cat bounce, this is why. So this was your dead cat bounce, and within 24 hours, we've wiped out the last couple of weeks of the recovery. Cat may try and rally, but this market is looking very heavy. You have some of the copper stocks not acting great. In fact, I want to show you copper because I think that's also waving a red flag on global growth. It's trying to recover a bit today, but this breakdown under 401, I think, is very important. It's showing slowing growth. What ties in with that narrative is the ascending triangle in TLT, which, if you look at the daily, the breakout's at 109. The implications of that could be with risk off, with what I just talked about in the stock market. And with risk off, I don't think dollar rally will be far behind. So keep an eye on that. That's saying that yields could come down. In fact, even the strength of the market in the last several weeks has been semiconductors, because of lower rates are supportive, and even the semis look vulnerable. Look at this RSI reading, could negate this breakout right here under 255. So I think there's vulnerability in equities, and although yields are coming down, that could be really the hook that traps traders that'll say, well, rates and yields are coming down, what's wrong with the stock market? And I believe that we're making this transition from worrying about inflation, not that it's been licked, but to start worrying about growth and credit contraction. So I also took even a spec position for a trade in gold. I know that a lot of people have FOMO in the gold. I think we're completing up here. We're still up $5, but I sold some at 2028. If you see look at this daily divergence in the gold, now's not the time to get FOMO, and I actually believe that we'll pull back to 1930, and it does open the door to be able to buy gold in the coming months. Back under 1900, maybe as deep as 1800. I don't think many asset classes will survive a liquidity break, a big hard break in the S&Ps. I think everything will come down. Gold will not take out these lows, but the October lows. But I think that the S&Ps, that it has destiny to do so. In fact, here's an S&P target that sounds quite aggressive right now that most people have said isn't going to happen anymore. And that will show up on the weekly here. And I'll wrap it with that. So here's your weekly chart. My charts are a little slow this morning. Let's see what's going on here. There we go. So back here, that may be by the summer, we're trading 32.50, and then you could buy the world. So don't get buried up in the dollar. Start following this pattern. Also, although the dollar made a new low, the yen did not. I want to see if that continues to develop in the yen of not taking out this 130 low, putting in a higher low. So this is really showing more relative strength than the dollar. I'll be viewing this. I want to warn people to be very careful about carrying positions into this Friday. U.S. markets will be closed, but we're still releasing the NFP. And anything can happen, and then you won't have until Monday to make adjustments. So tread lightly. Nothing wrong with even being flat, or if you have big leads in the market, taking something off the table and tightening up your stops. I'll be back with you tomorrow. I'm going to have Patrick Kareem with us at Bad Charts 1. Patrick's showing some important money flows at an important juncture between equities and gold. So we'll be talking about the gold tomorrow, and the fact that we may be having a major shift of money flows out of equities into things like gold. Have a great day trading. Remember, don't just count your